Morning, good afternoon, and good evening. I hope you're all doing well wherever you are joining us from. And thank you so much for being here with us today for our session titled Broadening Horizons Islamic Finance for Corporates. My name is Mustafa Adil. I am the head of Islamic finance for the London Stock Exchange Group, and I am delighted to be your moderator for the session today, where we will explore how Islamic finance continues to evolve to serve the financial needs and provide solutions for corporates operating in different markets around the world. Over the past year, we have seen remarkable growth in the sophistication and adoption of Islamic finance solutions by corporates. To support this, Standard Chartered, in collaboration with the London Stock Exchange Group, has recently released a report titled Islamic Banking for Corporates. You can see a QR code on your screen right now. You can download the report from this link. And really the purpose here is to highlight the increasing shift in client expectations when it comes to Islamic finance solutions to address real-world problems and business challenges that they face. Today's conversation will dive deeper into some of these findings, from government policy actions that are driving the adoption of Islamic finance to how corporates are practically using Islamic finance to address various challenges, including unlocking growth, accessing new markets, and tackling sustainability. And to increase the relevance of this session, we are truly privileged to have three very, very prominent speakers with us from different markets who can talk about how Islamic finance impacts their business and their engagement with clients. We are delighted to have Joon Nien with us, who is the CEO of Standard Chartered Malaysia, who will bring insights from the institution's global leadership on how the institution works with clients across markets in Asia and the Middle East. We have Puan, Noorlida, Jelani, who is the CFO of UEM Lestra Berhad, Malaysia, a group that is at the forefront of infrastructure and renewable energy development. And we have Mr. Vivek Oberoi, who is Executive Director, Corporate Finance at Omniat from the United Arab Emirates, representing one of the region's most innovative and prestigious luxury property developers. Thank you very much, all of you, for being with us today and for sharing your insights. To start with, I'd like to set the tone by going through some of the key findings that emerged out of the Standard Chartered Islamic Banking for Corporates report, and really share some of these as a foundation for the conversation that we will have later today with our guests. And the first thing, it's always good to put things into perspective through evaluating them in numbers. And the Islamic finance industry really has grown tremendously in the last couple of decades. Today, the industry sits at over $5.5 trillion in assets, projected to exceed $7.5 trillion by 2028, which is truly a phenomenal feat for an industry that is only 50 years old. And within that 5.5 trillion, $4 trillion comes from Islamic banking assets, right? So Islamic finance banking is a preeminent part of the Islamic finance industry and makes up the bulk of the assets. What is particularly interesting is the growth rate. So it's projected to grow at nearly 7% over the next few years. There are over 600 Islamic banks and windows that are operating in over 80 countries around the world, making it a truly diverse global industry as opposed to a niche segment that's purely concentrated in a few markets. And then what is also particularly interesting is the concentration of some of these assets, 85% of those assets being in the MENA region. But we are seeing increasingly development of that in Southeast Asia, in South Asia, and particularly even beyond Islamic banking. When we look at things like takaful, which is Islamic insurance, when we look at things like sukuk instruments, which help tap into Sharia-sensitive investors, we are seeing a global interest coming from many, many different markets and regions. So what does this report cover? Why did we do this report? We wanted to essentially demystify this $5 trillion industry for corporates, right? When we think of corporates, and when we conduct surveys with our stakeholders, many of them say they have very limited familiarity with Islamic finance. 42% said that they have somewhat or not familiar with Islamic finance. 65% said they had no background in dealing with Islamic finance entities. So we wanted to demystify this opportunity and this industry for them. We wanted to look at what is Islamic banking, right? What are the principles that corporates should be aware of, right? What are the governance structures that are in place? How does it differentiate from conventional banking? And most importantly, how can it be made easily accessible for corporates? And what we found when we went through the report was there was three key driving motivations for why corporates would want to engage and why Islamic finance could be a strategic enabler for them. The first one is access to new markets. Islamic finance is systemically significant in many, many different markets around the world. And those markets are very prominent trading in markets and other growing entities within emerging markets. And that's why for corporates to deal in those markets, it's very important for them to understand and be able to utilize and leverage Islamic finance as part of their aspirations. The other thing is strategic positioning. A number of governments have adopted Islamic finance as a core pillar of their economic diversification and growth strategy. So for corporates to play an active role in some of these markets where the government is pushing its direction and its mandate, it's important for them to understand how Islamic finance fits into the equation. And that includes the likes of Malaysia, Indonesia, Saudi Arabia, the UAE, Turkey, Pakistan, and many other markets where the government is a key driver of the development of Islamic finance in those sectors. And finally, to access new capital sources, right? We know that there is a large underserved segment of Sharia-sensitive investors who are making their investment decision based on Sharia considerations in addition to commercial considerations. And corporates are increasingly accessing and tapping into those customer bases, right? So we have issuers coming from the likes of Hong Kong, South Africa, the UK. You have US-based corporates that are issuing sukuk to tap into this capital base. So these are the three key motivators as to why corporates are looking at expanding when it comes to Islamic finance. And what are the services that they need? What do they need support with? How do institutions like Standard Chartered support the ambitions and aspirations of these corporate customers? Well, essentially, there's many, many different areas, but four key pillars stand out, right? Transaction banking is obviously at the forefront to facilitate cash management, to facilitate payments and collections, trade finance, etc. Financing solutions, to facilitate working capital finance, term finance, structured finance are all critical. Risk management becomes a very, very important part, and this is an emerging area of Islamic finance. How do you hedge your on-balance sheet exposure in a Sharia-compliant manner, where Islamic finance doesn't embrace speculative derivatives, but they do look at structures that are looking to hedge on balance sheet exposures, managing credit risk considerations and others, and being able to provide general holistic risk management solutions that are Sharia compliant. And finally, investment and advisory, right? What type of corporate advisory, what kind of capital market access can institutions offer, what kind of treasury investments are available? All of these things become increasingly important when it comes to the lens of corporates when looking at Islamic finance. And as we look ahead, there is a lot of innovation that is taking place. So we know that digital innovation, digital assets is going to be a big part of how this industry develops. And digital innovation serves a number of features, right? It expands the reach of Islamic finance across different markets, it enables seamless transactions, it provides new channels for capital raising, and most importantly, it provides greater transparency and governance, where you have asset-based transactions, where you have asset ownership changing hands, when you have all of these, logistical considerations. This type of disruptive technology can help streamline and increase transparency. So from a Sharia review perspective, from an audit perspective, all of this is verified and Sharia compliance is protected across the transaction lifecycle. And another key emerging area is the sustainability aspect, right? In Islamic finance, and sustainability go hand in hand with a lot of the core principles. Islamic finance has many of the core principles in place that align with sustainability, including, not being harmful to society, supporting the environment, and various other aspects. So Islamic finance has a natural affinity with investors, and even in conventional ESG literature published by the likes of CFA Institute and others, they recognize Islamic finance as a subcomponent of faith-based investing that aligns with the principles of sustainability and ESG. And we can see that even in the market. I mean, if you look at green sukuk issuances versus traditional sukuk issuances, green issuances are significantly more oversubscribed, 4.3 times versus 3.1 times for a traditional sukuk. So you have a lot of these factors that are aligning that not only have helped to address the motivation of corporates who want to engage in Islamic finance today, but also looking ahead how it will help to streamline and enhance and continue to grow. Ladies and gentlemen, that was a very, very short overview of some of the key findings that we had from the report. But I want to really take this opportunity to engage with our prestigious speakers who we have, who will be speaking about the different aspects of what we have covered. And I think that, without further ado, I would like to go straight into the conversation with them. And Mac, I'd really like to start with you because, these insights that we've shared, a lot of your team members have supported in collaborating and validating these insights. From your perspective, from Standard Chartered's perspective, what are some of the most common, support that at a government level you receive from Islamic finance, particularly operating in Malaysia, which has very actively supported the development of Islamic finance industry, but across different markets? How do you see government playing a role in supporting the development of Islamic finance?
Mustafa, thank you. And I think the first point to establish, you've kind of highlighted the why. Why is there a push into this, and into the growth of Islamic finance? You talk about, the real world economy. You talk about even kind of new ventures like digital assets and so on. If you step back, the Islamic finance started about 40 years ago. And but it wasn't really until maybe the early 2000s that it started gaining momentum. So if you think about Saudi and the UAE started in the 70s, Malaysia and Pakistan, for example, started around the 80s. But it wasn't till kind of early 2000s. And the key underlying reason is simply stronger regulatory framework. So starting with Malaysia, we have the financial sector master plan, which is really kind of focused on positioning Malaysia as a global leader in Sukuk, which it has achieved, and also in terms of Islamic fund management. We've seen a lot of enhancements kind of enabled by the regulators to develop access to the capital markets and also, pushing and promoting green and sustainable Sukuk. So in Malaysia, clearly, regulatory involvement is absolutely key. But not just Malaysia, if you cut across some of the other markets, in Saudi's Vision 2030 kind of embeds Islamic finance into its financial sector development program. And this, if I'm not mistaken, kind of mobilizes long-term capital for privatization and SME financing. And then the UAE, is aiming to increase Sukuk listings by 2.5x over the next 5 years. And again, this is kind of aimed at expanding SMEs' access into finance and of course also strengthening the halal economy. Pakistan, the strategic action plan is kind of even taking one step further in terms of a kind of a broader wholesale conversion of the banking sector into an Islamic finance model. So if you look across just these four markets, there is a real impetus and the regulators play a strong hand. In short, the government's got serious. More banks, more products, more choices. Many countries no longer treat Islamic finance as optional, but as a deliberate policy to embed Islamic finance into their respective national financial sector blueprints. And this kind of institutionalization is key in signaling a long-term commitment. And what more importantly, it gives participants, issuers, a lot more regulatory confidence. So when you combine all of these factors together, it is not surprising we've seen that push. And in recent years, from 4 trillion to potentially 7.5 trillion over the next couple of years, the momentum will start to grow quite exponentially. Thanks, Mustafa.
No, Mark, I think that's some excellent insights. And in fact, the countries that you highlighted, not only do they have very strong government support in terms of driving Islamic finance, but we at the London Stock Exchange manage a Islamic finance development indicator that looks at the most developed markets. And the four markets that you mentioned are in the top 5 when it comes to the development of Islamic finance. So really there is a strong alignment and link between that government and regulatory support and oversight with the development of the industry. Noorlida, I want to come to you because obviously, you have a different perspective. Mac mentioned how the Malaysian government is, prioritizing and developing Islamic finance. But from your perspective at a local level, how do you see the Malaysia's policy framework impacting financing decisions for an infrastructure institution like yours, which would have obviously very specific needs, and longer term needs when it comes to Islamic finance?
Thank you, Mr. Mustafa, and thank you, Mark, earlier. So I think first of all, I would like to share a bit about Lestra. Basically, we are just 2.5 years old. We are a wholly owned subsidiary and the green industry arm of Group, who is in turn wholly owned by Khazanah Nasional Berhad, the sovereign wealth fund of Malaysia. Together with us, we have Nor Power Group, which is the pioneering independent power utility backed by 250 megawatt plant capacity. We also have Synergy C, which develop, own, and operate renewable energy power plants generated from palm oil effluent, solar, and hydro, with a combined capacity of 128 megawatt across Malaysia. So as we all know, I mean, coming back to your question, infrastructure is a capital-intensive investment with long gestation period. Malaysia has launched the National Energy Transition Roadmap, NETR, under the 12th Malaysian Plan in 2023. So that's how we were birthed, conceptually produced. And the NETR is a comprehensive plan to guide the country toward a low carbon economy and achieve net zero emission by 2050. In the short term, it's supposed to shift towards 40% renewable energy capacity by 2035. So back with a real asset, this is in line with Islamic financing that support real economic assets. Many renewable energy and infrastructure projects qualify more easily for Shariah-compliant funding because they have tangible assets, predictable cash flows, long-term development. All these are all aligned with the Sharia asset-backed principles. With intent to support the NETR implementation in Malaysia, Group has established a 7 billion sukuk Sustainable and Responsible Investment SRI Sukuk Islamic Bond Program. This program was, as Mark and Mustafa has mentioned earlier, was received favorably by sukuk market, namely due and its ability to tap to a broader investor base, Islamic fund, pension funds, takaful. We have lower issuance friction because Sharia governance standards are well established, despite the fact that the industry is new and the company is new. And we have strong domestic liquidity driven by institutional Islamic investors. So I think the fact that we are able to provide green product combined with Islamic features has resulted in cost efficiency and oversubscription, which obviously benefit infrastructure issuers like us. Hopefully, this is able to support the government policies in supporting green energy.
No, that's a fantastic response, Noorlida. And I think you touched upon a very, very important point that we see is the alignment between Islamic finance and the real economy through the financing of real assets, tangible assets, cash flows, and so on. And sustainability, you mentioned as well, and I will come back to that because that becomes a critical part of any conversation that we have when it's Islamic finance. And before I move to Vivek, I just want to share very quickly the results of the first poll question that we had. And it seems that the audience is quite diverse in terms of the responses. Access to new markets and funding sources is the main response, followed by alignment with sustainability, and then alignment with government mandates and expansion to new markets are both being recognized significantly as well. So I think across the board, the report has indicated what most of the audience feels is the primary motivators when it looks to a organization's interest in Islamic finance. Vivek, on the back of that and on the back of the comments that Mac made regarding the UAE's ambition to promote Islamic finance and significantly grow their asset base, I want to turn to you and ask, with the announcement of the new strategy and with the UAE looking to position itself as an Islamic economy hub, how does that translate into opportunities for developers like Omniat?
So Mustafa, thanks a lot, and Mac, thanks for inviting us to the webinar today. Just to put in perspective some of the numbers which you made, Mustafa, Islamic is a 5 trillion market, and as you said, projected was 7.5 trillion. It's a huge opportunity, it's a huge market, nobody can ignore. I mean, this is absolutely the critical for growth, not only in our industry, but many more industries who are looking for competitive long-term funding sources and liquidity. The other important factor is that 85% of the Islamic assets are in Middle East, which literally means we are in the hub of the economic, finance, Islamic activity. So, I mean, this is absolutely an area which every corporate, every entity in this part of the region looks at, even if they choose others. So this is imperative. As far as our industry is concerned, we are one of the higher end developers. And for us, there are few imperatives as we grow. One is you want long-term competitively priced funds, which can be used for our developments. And Islamic fits well for few reasons. One, it meets the principles of Sharia. Everything that we raise as real estate developers is asset-backed, which smacks well into the Islamic financing principles of Sharia. Its investors base is very wide. In fact, we have had 2 issuances in last 8 months, and thanks to the investors and the institutions. We have at least about 22% of investors which are outside the region, which means the Islamic finance framework is something which is accepted not only by the regional investors or the regional institutions, but far and wide from Asia to Middle East, also to Europe and UK, which is a huge vote of confidence to the governance and the Sharia principles, which are now accepted worldwide as a safe form of lending. The third important thing which gives us a lot of credence for Islamic finance is the wide investor base. So the investors are getting more and more convinced that Islamic lending principles are a more relatively well-governed and a safe form of lending for them. So what does the investor want? Safety, governance, and a fantastic structure around which they're lending. So I think Islamic gives you all those parameters. As far as real estate is concerned, as we just had Puan and Mac said, Islamic is natural for us to look at. We believe the investors also like something which is tangibly secured, which is our real estate assets. There's a growing awareness that cash flows are finite. There's a steady flow of revenue, which I think follows all Sharia principles. It's all absolutely green and sustainable. In fact, our corporate philosophy has always been sustainable. And all our projects that we have are all LEED certified. So we are in sustainability in a big way, and that's been the philosophy. Wellness, sustainability, and welfare, especially post-COVID. That's what people want, and that's what we offer to our investors in all our living conditions. So we believe this is a fantastic source of liquidity for most real estate developers, fits well. And I think the confidence which people get with the Islamic framework is fantastic. So I think we are well placed in this.
No, that's an excellent response, Vivek, and I'm very glad you shared those examples of reaching out and the fact that the investor base is so broad when you leverage Islamic finance, and you articulated many of the advantages that Islamic finance can offer and how it aligns with that. So I think the optimism that I'm hearing across the panel is great, but I want to temper that with maybe some of the structural pain points that we may come across, and move on to the next part, which is to really look at how Islamic finance addresses some of the sector-specific challenges when it comes to that. And Puan, I want to start with you. Obviously, you mentioned infrastructure projects, and what we know about infrastructure projects is they typically have a very long horizon, right? And that comes with its own challenges when it comes to the type of capital and the type of investors that you need. So how has Islamic finance supported you in getting the right type of capital that meets the long-term horizon? And what are some of the structures that you may have utilized to achieve that?
Okay, thank you, Mustafa. So I'll just use some simple example that we are all familiar with. I think with the rise of EV, many of you may have solar panel at home, and so if I just use a sample of a solar farm, it's basically an installation of a solar panel that convert heat into energy. It has a lifespan probably up to 25 years, depending on technology and maintenance. All projects will have construction period and revenue generating period. So depending on the characteristic of the project and the financials market at that juncture, Islamic finance provide us 2 options, either tapping directly into the sukuk market or leveraging on short-term financing facilities. So sukuk is a preferred option as it provides the certainty in profit rate, longer tenure that can be amortized depending on the revenue profile of the project. our subsidiary, Synergy C, specializes in building rooftop solar panels. It is not efficient to obtain funding for each individual projects. So instead, we have actually set up an Islamic notes issuance program of an aggregate amount of 1.5 billion ringgit in nominal value, Sukuk program for the issuance of senior Islamic medium-term notes, senior Sukuk Wakala, and also the subordinated perpetual Islamic notes, perpetual Sukuk Wakala, based on the Shariah principle of Wakala bi al-Istimar. It is structured under the Green Sukuk framework that is aligned with transparency and disclosure requirement of SC, Asian green bond strategies, and green bond principle. So, we have a framework, and at the same time, we have all the green features into there. But as we all know, if Sukuk is raised during construction, it may be subjected to negative carry. Profit rate will have incorporated construction premium. So we thank Stanchart for also providing us with a commodity murabaha financing, with trade line facilities. This provides us the flexibility that support various requirements to draw down to fund progressive construction profile, so that it's allow us to mitigate any construction risk being locked in a longer tenor rate or even negative carry. Then upon completion, then we can tap into Sukuk if need be. So facilities that we receive from Stanchart include like bank guarantee kafala, letter of credit murabaha. It helps to provide also credibility to new company like us in undertaking our business transaction with global partners, because they help to also lend us creditworthiness. So at the end of the day, depending on the size of the project, the characteristic of the project, Islamic finance can provide both short-term and Islamic finance options, and that's something that we will use depending on each project that we have at that point of time. So yeah, I think that's how we use Islamic to manage both risk and cost of each project that we have today.
Just to add, and I thank you, Puan Noorlida, for the kind reference to Stanchart, much appreciated. If we had this conversation 20 years ago, I would think a lot of this would not be possible. So, especially in the last 10 years or even 5 years, maybe, we've seen the level of sophistication and advancement in the product permutations in terms of Islamic financing. So when you do a kind of a side-by-side with conventional, you'll be hard-pressed to see major gaps. And, I would also kind of maybe take a bold step to say that, with the cusp of tokenization, if we are a firm believer of the kind of digital asset momentum, we might actually see Islamic finance be more relevant in the capital markets and in terms of funding than conventional. So it's just kind of reflecting where we are today versus if we had this conversation in 2015. It might be Puan Noorlida, you might not be able to thank Stanchart as much as you would be able to now, because we do have the kind of advancements to offer. So I just wanted to add that in, Mustafa.
No, Mac, I completely agree, and that exactly resonates. I mean, like you said, you said 20 years ago, even 10 years ago, I think you would have been hard pressed to, be able to support a operation as complicated and as long term as what Puan is leading, with the different life cycle needs of the different projects that are there, and using wakalas, murabahas, using sukuk structures, ijaras, and various other things to come together and deliver a holistic solution is really demonstrates how far Islamic finance has come along in the last few years. And the other thing that I want to mention before we move to Vivek for it is the response to the second poll, which is around what area of Islamic corporate banking is most relevant to your organization. And it's not surprising, I think, to see that financing remains to be one of the most critical elements when it comes to the needs of corporate institutions for Islamic banking, and transaction banking being the second. But what's interesting is 22% mentioned risk management, which is increasingly becoming more and more important for institutions to get Sharia-compliant risk management solutions, and investment and advisory coming in at fourth as well. So another very interesting set of insights that can be derived from that. Vivek, coming to you, how do you see Islamic finance from, the point of view of, a developer like Omniat that, again, has a pipeline of properties being developed. Everything is at different stages of its development. A lot of capital intensive, activities that take place. How do you see Islamic finance supporting the development of an entity like yours?
Yeah. So there are two parts to it. One is we just spoke earlier, all of us, about the importance of Islamic finance as a huge pool of liquidity and a more sustainable pool of liquidity for long-term projects. Puan talked about infrastructure. We don't fall into the longer term, but we do fall into the 4 to 5 year kind of a funding requirement. And clearly, Islamic finance is a huge pool of liquidity. But more importantly, from that, I have to point out that the leadership of this part of the world, especially UAE, has made a very concerted effort and given the framework for Islamic finance. I mean, everybody in the region and worldwide has heard very clear indication that they want to grow the assets 2.5 times. They want UAE to be the hub of Islamic finance worldwide, obviously with due respect to Malaysia and others who've been there. But more importantly, what they have done is put the right framework. Now, with due respect to LSGE, Nasdaq Dubai has equal amount of sukuk listings as probably LSE will have. The regulatory framework, whether it is the Central Bank of UAE or the Higher Sharia Authority, have all governed towards facilitating the sukuk market and the investor base to come through. Now, coming to our industry in specific, as I mentioned earlier, the two essential ingredients is long-term funding at competitive rates, and then for investor confidence, the governance framework and the regulation and contact. So when the central banks and the government themselves regulate, there's a stock exchange which gives a governance and a two-way code for investors to come, and there's transparency and disclosure. I think that's what the investors need. Our industry, as I said, is a natural asset-backed good rental, which shows that the consistent return back for the profit of the sukuk holders, and mostly the fact that there is an underlying asset which manages to say that security of capital is there for the investors. It's not only us. Most developers have resorted to sukuk as I would say, the second or the third mode of growth capital for them. Obviously, after your own equity, there's some bank funding, but normally this is now, as I would say, become pretty much industry standard that when you reach a scale and size, this investor liquidity is sustainable. I feel the investors are getting more and more confident that they see that regulations work for them. They see that the governments are proactively putting transparency. I feel sukuks haven't seen even a shade of what potential there is. Other industries are joining in. If you look at the sukuk tables, probably apart from the non-investment grade, there's only one particular industry that dominates. But I guess there are more coming, and people will start coming into this because, as Puan directly said, great alternate to bank funding with due respect to MAC. But the fact of the matter is, for longer term, probably what you need is more of a external capital rather than just being dependent on bank capital. So we firmly believe, and I think just to add to it, Standard Chartered has done for us phenomenal. Their Sharia team in terms of structuring, hand-holding, and even when there is a bit of muddle in terms of regulatory, I think they've been on top of the game. So Mac, thanks to your team and the Islamic team.
Thank you, Vivek.
Appreciate those comments, Vivek. And I think, when the competition is always good, whether it is between UAE and Malaysia, whether it is between us and Nasdaq, I think that breeds the best of innovation and will be what drives the industry forward. You cannot have just one central hub. You need to have multiple hubs to help grow it as a global industry rather than standalone silos in itself. I am mindful of the time, but there is one point that I do want to come across very quickly, and that is around sustainability. So both Puan and Vivek, I want, Malaysia, UAE have both, allocated and mentioned their aspirations to become leaders when it comes to sustainability, right? UAE hosted the COP event a couple of years ago and had very lofty aspirations. When it comes to issuance of ESG or green sukuks, both Malaysia and UAE are the leaders when it comes to rolling that out as well. And they have their own sustainability initiatives, VBI that operates in Malaysia. You have sustainability guidelines that were issued by Central Bank and HSA on the Sukuk, on the green finance side in the UAE. So, maybe Puan will start with you and then Vivek will come to you. Puan, how do you see Islamic finance complementing or supporting Malaysia's broader sustainability aspirations and ambitions?
Thank you, Mustafa. So on this, I think we have spoke a lot about this. Islamic finance fits naturally with these sustainability principles. So for infrastructure players like us, this create a credible financing narrative when bidding or when engaging with policymakers. The green or sustainability-linked Islamic structure will continue to be our way forward. Yeah. From a project return, thankfully in Malaysia, Islamic finance immediately provide clear competitive advantage. It is a familiar instrument that does not have religious borders to it. Yeah, the stamp duty waiver. I think that is like a most key feature in Malaysia that makes it the preferred option compared to a conventional facility. And with that exemption itself, ensure that Islamic structure projects finance are better in returns compared to other projects that's financed conventionally. Our subsidiary Synergy also has exported nearly 23.8% of the biogas energy generated to the grid. And the issuance of green sukuk that we have further enhance our corporate reputation and brand value. And again, on these leveraging on green investment, in Malaysia, we are also given incentive called Green Investment Tax Allowance. It is an incentive that provides tax savings for companies that invest in green technology assets. And you may see that nearly 15 years of the project life, you won't be in a tax-paying position. So again, with Islamic finance, with it being greened, we are in a better position to raise more competitive financing. That in return will obviously support our shareholders and investors better. In fact, when we engage with authorities and policymakers, there is clear interest, like Mark mentioned about Asian before, the Asian Forum. There are many interests from local and foreign investors looking for these projects. And I guess at Lestra, our job is to get that project going. And we hope to continue to enjoy the support from these Islamic financing market and Stanchart.
No, that is fantastic to hear and to understand the role that Lestra is playing in supporting the aspirations and where Islamic finance can also play a role in facilitating that. So Vivek, again, coming to you as well, similar to Malaysia, UAE has very strong aspirations when it comes to being a leader in terms of sustainability. And how does Islamic finance complement the UAE's aspirations, and how do, institutions like Omniat and others see the two working hand in hand in this regard?
Yeah, thanks, Mustafa. So our debut sukuk was green. So for us, sustainability is quintessential. I mean, this is the starting point. In fact, our promoter, the chairman, is not now since beginning, has been absolutely convinced about one thing. Human wellness is the most important thing. And I think post-COVID, everybody's realized life is not about quality. It's about wellness and the ecosystem around it. So we are very clear that sustainability, green, wellness is the most important thing that we deliver in all our projects. Coming to Islamic finance in particular, and as exactly I'll quote from what Puan said, it just dovetails well into the investors, into the ethos, and into the whole religious fundamental that what is life about? It's not about profit. Life is not about doing business. It's about giving back to society, giving to human beings. So in our part of industry, it's not for profit, it's for human beings, it's for the lifestyle. And I think that's what the Islamic and the Sharia principles talk about. So when we go back to our investors and we go to Sharia principle and we say it's green, I'm sure it puts a little higher tick mark that, yes, this is the kind of place where we feel the Islamic liquidity is better utilized than many other places. So for us, it's way of life. For us, we will always be sustainable. And as I mentioned, All our projects have been LEED, whether it is platinum, gold, depending upon its commercial, residential. And we feel it resonates well with the overall Sharia principles.
No, I think that is fantastic, Vivek. And again, it's always good to remind ourselves in obviously the broader capitalistic structure that it's not just about profits, as you mentioned, but there is got to be a broader purpose. And I love how, globally the industry is willing to accept that, understand that, and acknowledge and put KPIs around how, beyond the profit motive we are supporting, and Islamic finance is a natural fit there. Thank you so much, Vivek and Puan, for your insights. Ladies and gentlemen, we are running short of time, but I want to take this opportunity to invite Mac to essentially deliver his closing remarks for the session and to bring our session to a close. So Mac, over to you. Please share your closing remarks for the event.
Thank you, Mustafa. And first and foremost, I'd like to thank my fellow panelists and also thank them for their very kind words, Vivek, Noorlida, and Mustafa. Thank you for being such an excellent moderator and host. And then to our attendees as well. It's short and sweet, but hopefully it captures the essence of where this topic is taking us. And in short, I would say that Islamic banking is no longer a niche. It's mainstream, it's strategic, and it's accelerating very quickly. Corporate demand is rising very fast, and it's not because it's a nice to have, but corporates are adopting Shariah-compliant solutions for liquidity, for balance sheet strength, for sustainability objectives, and governance alignment. And as we heard from our speakers earlier as well, level of sophistication products are increasing. So whether it's ESG-linked financings, repo to maturity, private credit, digital assets, and this is where growth will accelerate and where institutions must lead responsibly and sustainably. The biggest opportunity is now. The biggest pain point is also kind of simplicity or complexity, and therefore we have to kind of create more simplicity for people to understand. And this is where, as a bank across our network of more than 50 markets, we hope to be able to add value with our Sharia expertise. We believe that we can, kind of unpack and demystify a lot of complexities, and really explain to help our clients to explain, the whys behind the structures, so that corporates and clients will feel safe and comfortable and not intimidated by this whole topic. We once again want to thank all of you and hope that today's dialogue is at least a small step as we progress in a positive direction. So thank you.
Thank you very much, Mac, for those insights, and completely agree. That's exactly the motivation behind doing thought leadership series like this, is to demystify Islamic finance and bring it to the stakeholders, but at the end of the day, to also help facilitate their aspirations in this space. Ladies and gentlemen, thank you very much for being with us. I want to take the opportunity to thank all of our speakers, Mac, Puan, Noorlida, and Vivek. Thank you very much for being with us, for sharing your insights. And we hope that you benefited from this. We encourage you all to please do download the report. The QR code for accessing the report is available on your screen now, so you can take a quick scan on it. And we would like to stress that if you have any interest, if you want to share any insights, please do reach out to us. We're always willing to have a two-way dialogue so that we can improve and enhance these sort of market engagement activities and provide the content that is most relevant for stakeholders. On behalf of Standard Chartered, on behalf of London Stock Exchange Group, I would like to thank you all for being with us today and look forward to, inshallah, connecting with everyone in the future. Assalamu alaikum wa rahmatullahi wa barakatuh.
Okay, thank you all.
Thank you so much, everyone. Thank you.